stacking my coin, stacking my coin. Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash. Stacking my coin, stacking my coin. Stacking my coin, stacking my coin. Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash. Since I was born, been stacking my coin. These niggas pop, my money keep growing. Your girl is a dot.
Welcome, ladies and gentlemen, to episode 100. Let me just do a flex bomb real quick. Oh, yeah, we got episode 100. I got a special guest. I'm sure you could probably guess who it is. But we are going to get started here in a second. FOMC rate hike today at 2 p.m. in about 6 minutes. So stick around, ladies and gents. Shout out to Life Size Box out there, too. That's my guy. Holla.
Stacking my coin, Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash. Stacking my coin, stacking my coin. Stacking my coin, stacking my coin. Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash.
Smoking on that crippy got me cliff high. Steam pot, heat rock, slingshot. Surfing through the city while them chips rise. Hot boy, do it big time. Element with my summer bay, we booed up. Cali hit the bay, we fly MIA, we pulled up. Sipping on this drink, bitch, I know the way. We juiced up, nigga violate till it's JFK like your roofer. Coin daddy bout them chips, nigga rap snacks. Face all in a box, nigga Snapchat. Fucking with the ops to get you clapped. No cap, nigga rap.
Stacking my coin, stacking my coin. Stacking my coin, stacking my coin. Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash. Stacking my coin, stacking my coin. Stacking my coin, stacking my coin. Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash.
Hulk Hogan, we coming for you, nigga.
This episode is brought to you by BYDFi, the superior crypto exchange surpassing Kraken and other exchanges with its powerful features and exclusive benefits. Formerly known as Bityard, with BYDFi you enjoy unparalleled advantages such as low slippage, unmatched liquidity, and an impressive leverage of up to 200x, outshining the competition. Unlike Kraken, BYDFi offers the widest ranges of leverage tokens covering most of the popular cryptocurrencies today. And right now, US and Canadian users who complete KYC and deposit at least $100 will receive a $100 perpetual contract trading bonus. And there are also free rebates when depositing USDT via your credit card. Embrace the future with BYDFi, featuring over 150 derivative pairs and unbeatable perks. Link in the description below.
Bitch, I know the way. We juiced up, nigga violate till it's JFK like your roofer. Coin daddy bout them chips, nigga rap snacks. Face all in a box, nigga Snapchat. Fucking with the ops to get you clapped. No cap, nigga rap.
Stacking my coin, stacking my coin. Stacking my coin.
Fuck it! Do it live! I'll write it and we'll do it live!
Okay. Ready?
Fucking thing sucks! We'll do it live.
Okay. All right, ladies and gentlemen, we are doing it live. I'm going to lift the veil right now to show you who our secret, very popular guest is for today. Oh, is it? Oh my God, it's Chris Rice. Unmute yourself, bro.
Yeah, I'm realizing I was muted. I thought I was unmuted. What's good, my friend?
What's up, homie? How are you?
I'm doing great. Let me tell you something before we even get started, because I wanted to wait for this very moment in time to tell you this. So I told you I had a 3:00 p.m. schedule today. I had to reschedule yesterday twice. We both had to reschedule. Now we're rescheduling till tomorrow. But yesterday I was thinking about doing a live stream about the FOMC meeting, and I thought about you. And I thought about it a couple times last night, and I thought about it this morning. And then out of the blue, you send me a message saying I'm going live at 1:50. If you want to join me, join me. And it was exactly what I was thinking about. So this is like, it was just another one of these signs from the universe about you being my brother from another mother. Man.
There you go. Round of applause for me being the brother from another mother. Yeah, that's great, man. It's serendipity. It's the universe. It's whatever you want to call it. God, Jesus, Buddha.
It's beautiful.
Luda, whoever. Yeah, we all interconnected, man, in some form or fashion. So yeah, hey, when you get it, you gotta just act.
When
on
you're connected,
you know?
man,
That's
it's
the
really
thing.
weird. That's
you gotta act on your intuitions, ladies and gents. You gotta act on your intuitions. When you get that, thing in your stomach, gotta act on it. I'm telling you.
The other good thing, too, that I really like about how we are able to do this co-stream with StreamYard's new edition is that it aggregates the chat from both of our YouTube channels into a single. So I don't know if you know where they're coming from.
I do. I see it.
But okay. Yeah. I think that's great, man.
So we're going to get right into it. FOMC right now, and then we'll come back, guys. So stay around. Let's get to it.
Seconds before we go to Steve, what kind of language should we be looking?
Turn this down just a little bit. I want to ask you a question.
In the press conference,
will they talk about additional policy
or mute it for just a second? Because
go ahead.
What are you thinking? What are you thinking? Like, what are your thoughts with today's verdict?
I think they're going to pause. I do think they're going to pause. So
the market has priced that in. I think it was iffy before the CPI data yesterday. Right. And the CPI data, a lot of people are speculating. Now, I am going on out on a limb and say they're going to raise it 0.25 basis points. I mean,
here we go. So
I still feel like if they don't do it, let's do it.
Raising the median forecast of the funds rate to 5.6%, indicating a very hawkish committee outlook and strong support for at least 2 more rate hikes this year. I think this comes under the definition of a hawkish pause, maybe a very hawkish pause. FOMC statement saying it's holding the target rate steady, allowing it to assess additional information, including the cumulative effects of tightening and lags of monetary policy. I want to go through in detail here the summary of economic projections and the funds rate. Only 2 members of the committee are forecasting the rate at the current rate of 5.13%. 4 support 1 more hike. 9, or half of the committee, is forecasting 2 more hikes, but there's more because 2 are supporting 3 hikes and 1 supports a full percentage point higher or 4 quarter-point hikes in the funds rate.
Yikes.
The committee sees more inflation this year than it previously did, forecasting a 3.9% core rate versus 3.6 in the prior economic projections in March, and less unemployment, 4.1 versus 4.5. And moving on, they did see better economic growth this year, not tremendous, but 1% versus 0.4%. The statement said the economy continues to expand at a modest pace. Job gains have been robust. Unemployment has been low and inflation elevated. They continue to say tighter credit conditions are seen weighing on the economy, hiring, and inflation, but they don't act as if they will. Decision was unanimous, guys. I just say, in terms of a hawkish pause, this is for sure that with at least 2 more rate hikes forecast by the majority of the committee, and some want 3 and some want 4. And also one other thing you want to look at is if you look at the real rate forecast, the one that was the nominal funds rate minus
this makes no sense though.
Forecast, they're actually even tighter still. They had been forecasting.
So why pause if everyone if everyone wants to rate hike?
Right, because that's the exact thing that I was thinking, and that's the reason why I said they were going to raise 25 basis points. Is because I feel like there's still a couple raises in the spectrum. If you look at the employment numbers, they want the employment numbers to go down. They want unemployment to go up, and we're not seeing that. It's not reflecting. So there's a lot of things in the market that just are not really attached to fucking reality, man, and it's crazy.
Very much so, bro.
I mean, we're gonna pause for now, but we're gonna do 3 or 4 more raises by the end of the year. Now, let me go ahead.
What's the point of pausing?
Right, you should have just went ahead and raised 25 basis points. So let's see here, the FOMC meeting schedule. So
yeah, I don't get it, guys. Let us know in the comments though what you think about this rhetoric here.
We are looking at July and then September, October, and November. So there's only four more different FOMC meetings happening this year. So there's July, and then there's going to be a break in August. No, nothing happened in August. And then they're going to be doing one for September. And then they're going to be doing one at the very end of October, very beginning of November, and then mid-December. So, yeah. So
you're looking at probably a hike for the rest of the year, a quarter basis point hike each.
At least, well, at least 3 of the 4 of those. So we have July, the end of July, middle of September, end of October, beginning of November, and middle of December. So that should bring us. I mean, this is the thing, man. I really don't get what this. It's like these economists, these people that work for the Federal Reserve, these different chairs at the different branches. They seem to be special needs people that ride the short bus to work. I don't get it. I really don't get it. Don't get it. Not going to use. Not going to use. But they are special needs, and they ride a short bus, a very, very short bus.
You're talking about retarded?
4-letter bus. Oh, that's the R word I wasn't going to use.
Yeah, well, I used it for you. Thank you. Yeah.
Special needs. 4-digit bus. The 4-digit bus. Because most regular buses, I believe, have three digits. The short buses, I believe, had 4. And if anybody knows in the comment section, they can let me know. If you rode a short bus, did it have 4 digits?
Yeah, it's just a sidebar tangent. Why is that word now canceled? Because I know why. Because in a minute, we will only have 2 or 3 words to use. 1984, anyone?
We'll be speaking with emojis. That's why I've broken my name down to 3 emojis for my channel name.
I like it. Yeah.
Yeah. So I mean, we're going back to hieroglyphics. Modern hieroglyphics.
Yeah, we are.
But this makes absolutely no fucking sense, man, what they're doing. We're gonna pause. It's a hawkish pause, but we're gonna raise interest rates at least 3 or 4 more times, and we only have 4 more meetings.
I don't get it, man. I don't get it at all.
It would have made sense if this was the case to raise your interest rates up until the end of the year. And then let the holidays kind of do their thing.
Stick around, guys, because we're still going to stream at 2:30. We got Jerome Powell. He's going to get up there and do his double speak and confuse us even more.
That's where we know. That's where we'll know more information about kind of like what the market. We'll see what the markets are going to do here right as Fed Chair Powell is speaking to kind of give some more direction, because right now we're just kind of speculating that we have 3 to 4 more. But once the big balls talks, then he'll let it all out. So we'll see what happens, man.
So yeah, we'll see what happens, guys. Make sure you saw the commercial at the beginning. BYD-Fi, one of my sponsors, crypto exchange sponsors. Check them out. They are actually the first crypto exchange that sponsored me back in 2017. They did a rebranding about a year ago, but they have a new trading contest right now. If you guys are interested in potentially winning $9,000 or USDT, I should say, they have a trading contest, meme coin trading contest. Prize pool is $9,000. It is going on from July, a couple days ago, June 12th to the 30th, the end of this month. So check it out. Link in the description below for BYD-Fi. They were actually rated top 10 best crypto apps or exchanges, I should say, on Forbes Advisor. So that's pretty impressive. I scroll down here.
You didn't tweet anything out about this?
No, I don't think I did. Nope. Okay. But they are ranked there on Forbes Advisor. So that's pretty interesting. Been around for a long time. Follow me on Twitter, too, guys. Trying to get to 11,000. They keep taking away followers as they do on YouTube as well. Exactly. And also go follow Rice if you guys haven't yet. And I'm sure all of you guys watching right now are following both.
I don't know, man. They might be part of the plethora of people that are exiting my channel. It's exodus time. It just seems like there's so many people being unsubscribed from my channel. It's like, I guess either really people hate my shit or YouTube is playing some seriously screwed up games.
Yeah, I don't know, man.
I'm negative 7 subscribers for these past 28 days. Negative 7.
I'm at
32,269, and I did a video last Monday talking a little bit about this in the intro of the video. It was Monday or Tuesday, and I was at 32,208. I told you about the struggle that's been going on between the 32.2 and 32.3 area. It's been there all year.
Yeah, it's just weird, man. Very weird. Very weird. Also, follow us on Rumble, because that is where we do the uncensored content. It was a great live stream about 4 days ago. We're planning on
doing another one 2 weeks from that date.
2 weeks.
Which would be, if I'm looking at the calendars, that would put us at the 25th of June.
This is the highest viewed video on my Rumble. 815 views I've ever had. Highest viewed. So
mine, you've actually got more views than mine right now. Mine has, last I looked, it was like 650. I'm going to go ahead and refresh here. I have 651. So you've got a good 150 more than me. Plus,
did you keyword it?
Yeah,
you did.
Yeah, I mean, it helped me with subscribers. I'm up to 950 on that channel.
See, that's the funny thing. I got less subscribers,
but more views.
Got more views. Hey man, people just don't like us, so we just got to face the facts.
Yeah, that's what it is. That's what it is. No, obviously the Rumble thing shows something, though. I mean,
absolutely.
And that's, I think me and you had talked about continuing to do these every few weeks, and then try to translate that and fade into what we want to be creating.
Correct.
So yeah, something non-crypto related. But yeah, I did enjoy the I Hate Crypto uncensored live stream. That was good.
Word of the day is invidious, guys. Invidious. That is likely to arouse or incur resentment or anger in others. What do you say, Rice, is invidious right now to you?
NVIDIA causes invidiousness to the U.S. government.
NVIDIA chips, AI?
And to the climate culture people. To the people that are talking about climate change and the earth melting and all these things happening, I think that would be a good way of putting it.
Yeah, stick around, guys.
I want to say insidious, though. It sounds like insidious.
It does sound like insidious.
I've already forgot what it was.
Invidious.
Yeah,
like NVIDIA.
NVIDIA makes all the climate change people invidious when they continue to put out profitable Bitcoin miners.
Invidiously. Yeah, let's see how you guys can use that in the chat room today. But man, yeah. Again, stick around. 2:30. We're gonna go back to the stream, listen to Jerome Powell do his double speak and everything. How you feeling about the crypto markets right now? Because there was something that happened that I don't know if many people covered it, but this is a watershed moment, a precedent set in U.S. court that declares DAOs are people. Which this is a case, I didn't even really know about this, but this is a case that was with CFTC against a company called, can't remember the name of it, OkiDAO or something like that. Did you hear anything about this?
No, I haven't, but I mean, I'd be curious to look into it. The thing about the DAOs...
OkiDAO was sued by the CFTC. So we thought the SEC was the main. We got a couple agencies out there going at crypto, and we thought that the Commodities Futures Trading Commission was a little more acceptable to cryptos and everything, but they actually won a suit against OkiDAO.
It looks like crypto's dumping here. I got to pull up. It looks like Bitcoin's starting to go down.
Yeah, I did see Bitcoin starting to head down a little bit, not much.
It's going to depend on, obviously what he says, what Jerome Powell says. It's so crazy that everybody's like so dependent on what this guy is saying. People don't realize the power that the Federal Reserve has created. The dependency.
Ken Smith puts it right here. Well, this is really why, bro. We got to stop telling the truth. And we have to just shill bull market. And we have to coins. And
I've come to the realization truth doesn't sell.
What was the term I used? Suck the algo's cock?
Yeah.
I gotta do the thumbnails like that.
You did that. Yeah, you did the thumbnails.
And it worked.
Yeah, and I don't want to repeat it, but the kill and the 2 initials that I use for YouTube.
Yeah.
But truth doesn't sell, man. But I can't change that. I can't blow smoke up people's asses just to get views. I would rather not have the views.
I'm with you, and that's why I think we work well together, man. We're just gonna keep it 100, keep it solid, and just do what we do, and see what happens. But yeah, how do you feel about the CFTC winning this yet another case? Now, this doesn't necessarily have anything to do with a security or not, but it does put a lot of people who've been pushing the DAO thing. It puts a chink in their armor, man.
Well, the problem,
who was the first person that said this was going to happen, right?
Reginald Middleton.
Reginald
said it. Yeah, no, he did. Yeah, no, he did. Research paper.
Exactly.
The problem is that people are trying to. It's basically the same thing as like someone trying to do like an IDO or an IEO and versus an ICO, thinking that they're not breaking any security laws by doing a private offering. It's just
like, come on, guys.
Yeah, people have to realize it. I mean, just because you call something doesn't mean that is what it is. Yeah,
right.
A DAO in theory is a great idea.
Of course.
But the way that the community has tried to attach to a DAO is just basically to try to alleviate any legal or lawful responsibility for anything that they do. And they're not doing it proper. So a proper DAO, I think that when you do a DAO properly, they're not going to be able to attack the DAO, whether or not you call it a DAO or not, if you do the DAO properly. But when you don't do the DAO properly and you have attack vectors, or known people within the DAO that you can attack, then yeah, there's going to be issues because no one's doing it correctly. If anything, you should just be using another country that's more friendly and just doing a foundation. Makes a lot more sense.
Yeah,
but just DAO, a DAO, and there's so many DAOs. And I was talking to my friend Bobcat about this, that it's like not all these DAOs are actually decentralized autonomous organizations. It's just a group of people who's claiming that they're a DAO, but they still are in fact completely controlling the project.
Correct.
Which is the reverse opposite thing of what a DAO is supposed to be. It's more of a cow.
A cow. That's hilarious.
A centralized autonomous organization.
Oh, we got a new one now, ladies and gents. That's a good one. Round of applause. Round of applause for Kyle. That's
that would just ride out the fly.
Hey,
man.
If you hear that in the crypto Twitter, know it came from us, ladies and gents. Rice TVX, Kyle. I love it. Hashtag Kyle right now on Twitter, ladies and gents. Centralized autonomous. Yep, there you go. Right now, guys, smack that thumbs up for both of our channels, no matter which one you're on.
It's greatly appreciated.
Hit the thumbs up. Greatly appreciated right now. Share this on your socials as well. And we got a good guy, a good friend of ours here, Mind Your Biz in the house. Round of applause to him.
He put a W on it. What would the W stand for?
What would the W stand for, though, Mind Your Biz?
We couldn't reverse it.
That's
okay.
Round of applause for that. I got it.
I did say cacao. Good one, my friend.
He's a smart cookie.
He's too smart for his own good.
Cookie. Rage Against Machine, my cousin from the 313. What's going on, bro? Thanks for tuning in. Sorry for you. But yeah, man. Very interesting times we're in, man. And one other one I want to talk about really quickly before we tune back in is this one, Polygon, lands new partner with despite SEC securities label. I was wondering, I brought this one up, Rice, because last year and earlier this year, Polygon was on a tear. They were acquiring new clients left and right. Really like landing some big deals. Starbucks. The list goes on and on. There's so many major brands, Fortune 500 companies that have decided to land on Polygon to do their Web3 programs and stuff. What happens now since they're labeled as a security? Are these deals in danger, at least in the United States? What's your thought on that?
I mean, it's a good question, man. One, this partnership is with a company based in India. So, I mean, It doesn't really affect the United States. And if Polygon was to be technically deemed a security, then it wouldn't affect the rest of the world. It would just be obviously United States related.
Right.
So
do you think that those deals that they've already bagged here in the United States, all those Fortune 500 deals, you think they're in trouble? You think those deals are going to kind of fall apart?
No, because I mean it's not a done deal. It's not a security. And then I think Polygon, like some people from the Polygon team or legal team, has gone to Washington DC, I think the beginning of this week or sometime last week. I haven't done a lot of digging into it, but representatives went to DC to try to talk to politicians and try to let them share information about their project. I mean, the money behind Polygon, they're going to be able to fight this, and look at what happened with EOS. I mean, if they really want to pay a fine and just move on, that's fine. Because I forgot who some of the larger holders are of Polygon, but it's really interesting, some of the people that actually hold it, because it's going to be pissing off a lot of the TradFi people, because a lot of TradFi is invested in Polygon.
Well, pay a fine and move on, to me, still doesn't fix the issue here in the United States. That could still limit them from doing much of any business here in the States.
Did it limit EOS?
It's going to be interesting. Yeah, I don't. Well,
as far as I thought, EOS
was
right. EOS was allowed to still operate, and everything was still going on with the blockchain after the decision and after there was
you can't stop a blockchain, but
it was still available, I believe, on U.S. exchanges.
You're right.
If I'm not mistaken,
EOS, right?
I believe
Which
Coinbase.
Is weird. Yo, this is what I'm saying. Like, they contradict themselves all over the place.
Well, it's just there's not a lot. Obviously, there's no clarity, and we're still playing in a gray area. And I mean, yeah, Algorand's another interesting one. Having Gary Gensler go and speeches, multiple speeches, talk about his coworker who was a professor at MIT. I forget the dude's name, the creator of Algorand, but he basically shills Algorand, talking about how an Uber-like application could be built on top of the blockchain, and talking about all these positive things. Also talking about in a lecture at MIT, talking about Bitcoin Cash, Litecoin, and Ethereum not being securities, and also talking about 3/4 of the cryptocurrency market not being securities. So it's like, I don't really understand where Gary Gensler is coming from with all this conflicting, hypocritical information. It's like before he took the job as the guard dog, he was completely on board with crypto, pro crypto. So it's like,
but
you would think you could use his previous testimony, his previous speeches as a confliction of the job that he's in. Like, that's the reason why I think it's Warren Davidson who's calling for the removal of Gary Gensler and a restructuring of the SEC.
How much momentum do you think that's really going to get? I don't think any.
I don't know, man. It seems like there's some politicians that are pretty pissed off about the stifling of the crypto industry. So we'll see, man. We'll see. We'll see how much these people actually care about the future of the world.
Politicians here in America care about dollar hegemony, right? So I just don't see it when it comes down to actually inking something, signing a bill. I think it's going to fall apart. I think it's all dog and pony show. I just can't see it actually, because blockchain makes them accountable. Right?
Well, if blockchain was utilized in government activities, yes, it could make them accountable. Yes. But I don't see like blockchain technology in and of itself making the government accountable just because it exists, because blockchain has been in existence for quite some time and it hasn't made any government be accountable to anything. So I don't know, man. That's going to be a long conversation, I think, for us to have.
Yeah.
I mean, it's interesting I think Janet Yellen came out, if I'm not mistaken, because time is blurring for me. I don't know if it was yesterday or today, but she talked about the US dollar losing dominance as the world reserve currency. And there was also something that recently happened with the IMF. The the IMF just recently upgraded China's status in the SDR department. It wasn't much, but it's still an increase. And every increase leads to dominance. So it's really interesting to see what's happening. And the Bank of International Settlements and the IMF working with China.
Hey, bro, I think
Chinese markets are starting to open up.
Yeah.
Liquidity is starting to be available.
Next Uncensored might have to deviate a little bit from crypto and talk about the UAP situation. Are you familiar with Dr. Stephen Greer?
Yeah, the disclosure guy.
Mm-hmm.
Talks a lot about ET phone home.
Yeah.
Yeah.
Now he had a whole press conference in Washington over the weekend. It was at the
UAP. You're talking about unidentified aerial phenomenon.
Mm-hmm. UFO, UAP. Yep. And now they're calling them something else.
UFOs, I also heard, are undercover fund operations.
What is that supposed to mean?
Just government money being funneled around in different areas where it's not being accounted for.
Yeah, I'll send you some links to check out. He did a big press conference in Washington over the weekend.
I mean, I could send you a link. Gaston, you remember Gaston?
No, I don't know who that guy is.
Gaston Cruz.
Yeah,
he's a California dude, friends with like Omar Bam, Stash, all those guys, the twins.
I know what you're talking about. I'm just playing.
So he sent me a video. We can play it after the Jerome Powell speech if you want.
Yeah, we got about 5 minutes, guys.
It's actually not even that long. Let me see if I can get it to you super quick.
Oh, yeah. I saw this before he sent it on Twitter. I saw this. Yeah, I saw this. Yeah.
Did he post something about it?
Yeah, he did. He posted something on Twitter about it. Yeah.
So he was asking me, now I think the same time that this came out, there was more information about the Hunter Biden laptop stuff that had come out. So I don't know what's misinformation and distractions and what's truth. I mean, I feel like we already have otherworldly, because the word extraterrestrial too, and that's another discussion, man. Extraterrestrial doesn't necessarily mean off planet. It means extra. It means terrestrial, like our terrain, extra terrain.
Yeah.
You really get into the etymology. That's where some of these people talk about flat earth theories, Antarctica being a wall, and there's stuff beyond the ice wall.
Yeah, I'm with you. And the guy, I watched an interview last night. A new whistleblower came out, and
I just think it's distractions, man.
And he said that he's not. He calls it something else, not like out of this world, or in a different solar system or whatever.
He's saying from Middle Earth, homie.
No, yeah, or it could be coming from interdimensional. It could be from a different dimension.
On a turtle floating in space.
Eric Heckler. Yes, that name sounds familiar.
I haven't seen you in a while, Kat. Good seeing you.
Yes, this guy, this person she names here was one of the panelists on the disclosure event, over the weekend in D.C.
That's just, I mean, I'm an open-minded skeptic, man. It's just that until I see some sort of evidence or proof, to me, it's just all distractions. Like until I see like a ship floating somewhere, or I meet one of these so-called otherworldly extraterrestrial beings, that's one of the things that I have a hard time grasping onto. And you know that I have a pretty fucking open mind, but
yeah, you do.
Like just if they exist, they're already here. They probably look a lot like us, or can do something to appear to look like us. So that I don't feel like is a big deal, honestly. It's like because I mean, there's been this soft disclosure kind of going on anyways, but it's really kind of crazy about the timing. Yes, Kat, it is invidious. It's crazy about the timing though, considering everything that's going on. I mean, like people aren't talking. It's creating people to distract people from talking about the laptop stuff. Have you heard anybody talking about the Nord Stream stuff?
That's over.
what isn't that like a really big deal that took place?
Very big deal.
Like huge, like
that
World War
threatens all of
III.
Europe. Yeah.
Yeah, like, and
threat.
we just don't talk about it. You know, it's like
because we did it. And Biden said it on camera, bro.
Well, he said prior to it being done that if there wasn't certain things that were accomplished or certain things that were done, that it wouldn't exist. It wouldn't be anymore. So
like
yeah,
I said,
it was a threat. It was a threat.
I'm not
there
a
was no
Republican,
admittance.
Because I could never be a Republican the way these pussy ass N-words are acting right now, Rice.
Them pans. Maybe that's what pansies. Maybe that's what pansies really are.
No, seriously, bro. Like, where is the fight? Like, the Republicans are just as they're
Dude, that's
just
why
as,
I've told you. I mean, I say it
know?
very often. It's not. I can't say 100% every single individual in the Republican Democrat Party fits this slogan that I've been putting out. But right wing, left wing, same bird. They're working for the same agenda. It's
now I'm starting to agree with that terminology.
I mean, the more and more you see it, the more. Now, I mean, you're going to have actors and players speaking out and saying stuff. I mean, like, whatever came out of Rand Paul calling Fauci a traitor? And how much evidence was there that Fauci lied to the Congress?
Mm-hmm.
Does that even get talked about in the news cycle anymore? DeSantis speaking out against central bank digital currencies. I just think it's all just BS.
We'll finish up here, guys. We're about to tune back into the live stream, see what Jerome Powell has to say, how much he can confuse us. In a very what's our word today? In a very invidious way. I want to say insidious too. I don't know why.
It just feels right. It feels right.
Let's get to Jerome. Jerome!
More red than we saw when we began this about 90 minutes ago. The industrial's down nearly 400 points. NASDAQ off 0.5%. The same with the S&P 500. Bond yields, there you go. There are treasuries, and you see the 2-year and the 5-year. You still got a pretty seriously inverted yield curve.
Oh, yeah. And the 10-year has backed off. I mean, it was at 384. It's backed off somewhat. Again, the Dow is going to be a bit misleading today because of United Health. But to Bob's point, we were up a tenth on the S&P. Now we're down about, 4/10. So, you, Greg, think people need to listen to this whole press conference? Sometimes it gets really interesting towards the end.
That's right. Yeah. Listen to the very end. Some interesting questions come along then. It's like, for fit heads like me, it's like the best 1 hour of television.
And here is Jay Powell. Thank you, Greg.
Thank you. Good afternoon.
What's up, Bumblebee?
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities risk pace. We've covered the full effects of our tightening have yet. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy.
What up, Ben Sinchi?
And potential
Ben
headwinds from credit
in the house. We're coming, man.
Decided to leave our policy interest rate.
We're coming maybe in a month or so.
Continue to reduce
Talk to
our
Rice.
securities holdings.
Thanks for the super chat,
Looking
too,
ahead,
my
nearly
friend.
all committee participants view it as
I'm going to be speaking at his woo-woo con.
Increases will be appropriate this year.
Oh, didn't you say someone was going to? We'll talk.
I sent some information to them to reach out to you, but I'll shut up so we can listen to this jackass talk.
The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a half percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
She reminded me of crypto blood on a thumbnail.
I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were three issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss
you guys are that lost
about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
Because, dude, I wouldn't either. You don't know what's going to happen tomorrow. That's what I say. Why pause? It's just, it's fucking with the markets. It's like some chick who's rubbing on your leg, starts touching your balls, and your penis gets erect, and then she just leaves.
One, decision has
it's called blue balls.
I do expect that.
Well, I wanted to give the descriptive version.
I just get straight to the
people got to watch the very, very end of that uncensored live stream that we did, the I Hate Crypto, to hear this really awesome rape joke.
A level shift in the dots, stronger GDP, less of a hit to unemployment, slower progress on inflation. And I'm wondering, in this sort of, where
it's like Jim Rickards' brother.
He sure does.
Labor market's going to be stronger, it looks like.
I'm here reporting for my brother.
Demand's not coming down all that fast according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all three of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation, which is, we think, of as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source.
He's just blowing smoke up people's asses.
Slower than we would expect.
Just saying a bunch of words in concession to make it sound like he knows what he's saying.
PC inflation. That's not housing services, and we see only the earliest signs of disinflation there. It's a sector. It's a very broad and diverse sector.
They screwed up. They waited too long to raise interest rates, and they raised them too fast.
It's the service sector.
But they wanted to. They want to consolidate the banking sector.
Down there is to have a continuing.
That's why I figured we would see a rate hike.
We have actually seen,
because of the 277 insolvent banks that the Federal Reserve reported on last year, we've only seen a handful. I still say that. We've only seen a handful. If that handful has exceeded 2008, but it's not over. And
the handful has exceeded, not only exceeded, but it's eclipsed altogether what 2008's bank crisis, those banks that failed, they all fit inside of what
I know, that's what I'm saying. And we've only seen a handful of bank failures this year, and there were 277 insolvent banks per the Federal Reserve in Q3 of last year, and things have not gotten better since Q3 of last year. That's why I've compared this to like a rock hitting your windshield. And how the impact makes initially like a chip, maybe a place where the rock actually hit the glass, and then there's like maybe a couple little cracks.
Go up by 50 basis points.
And then you don't get that window fixed, that windshield fixed. Come back out the next day, and those cracks have spread. And over a couple days, couple weeks, you can't even see out of that windshield because the cracks have spread out so much, and then it just takes just something very minor to make that entire windshield just cave in.
In terms of speed, it's what I said at the beginning, which is speed was very important last year.
Again, JP Morgan, Goldman Sachs, these private bankers, they're the ones who run the Fed. They're the ones who tell Jerome Powell what to do.
It's common sense to go a little.
That's why JP Morgan has been accumulating banks since 2007, probably more prior to that, but that I know of, 2007. And so far they've accumulated a couple this year.
Moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make
He's saying more bullshit.
I think it allows the economy a little more time to
bullshit
adapt as we
call bullshit.
Get to see you know, we don't know the full extent of the consequences of the banking turmoil that we've seen.
Hulk Hogan, we coming for you, nigga.
To see that. It's just the idea that we're trying to get this right, and this is
bullshit.
The decision makes sense.
What?
You said July is
A
live.
bullshit? A bullshit? A bullshit. A bullshit.
It's due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some.
I love that
bank
kid.
At the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or?
When's somebody going to ask like a real question of like, hey, are you mentally capable of doing this job?
Last meeting too. Since we chose to maintain rates at this.
Is your goal to screw over the American people?
3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more.
How can you stand yourself, sir?
Love 006 says it
We'll look at
best.
those things. We'll also look at the evolving.
This is a man who has never had a job, never run a
sector.
Actually, I think he has run a business. I don't know. Can't balance a checkbook and takes orders from Jamie Dimon.
Yeah, no, he had a position back before the Fed. I forget what it was. He might have been advisors to presidents. That's when he was going by the name J Powell. Everybody called him J Powell. It was Jay. I noticed if you go back before the Federal Reserve time and you see any Jerome Powell speeches, it'll be Jay Powell. But I guess they didn't want to confuse him with anyone else. I don't know.
And given that, why do you feel confident that this is as high as
You
you're
told
going
that
to
Mike
have to revise
really-
the federal funds rate, or do you think
Just,
it's
again, similar to you on that thumbnail, man.
this cycle?
The left for the algo.
I mean, on the first part, I just think we're following the data and also the outlook, the economy.
Hey, YouTube algo,
the
we're
labor
gay
market,
for you.
I think has surprised.
Or not gay for you. We're just for you.
Over the last couple of years.
Let's do naughty things together.
Extraordinary resilience, really. And
let's have us a three-way,
it's just
a menage a trois.
Really, if you think about it, that's what's driving. It's job creation. It's wages moving up. It's supporting spending.
It's more bullshit.
Supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually in reality wind up being lower or higher, and there's really no way to know. But it's what people think as of today, and as the data come in, it can move around during the intermeeting period. It could wind up back in the same place, but it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously, the current rate, according to the committee, is not sufficiently restrictive. Is it 5.6? Is it 6? Where's sufficiently restrictive? Thank you.
I would say again that I think that over time, the balance of risks
What?
move from
A bullshit? A bullshit? A bullshit. A bullshit.
Traditional heights. I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. And if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has
again. I mean,
materially, but as you know,
why pause? If everything he just said doesn't make any sense, why you would skip pause this time? It just doesn't.
We'd like to see
makes no sense.
Credible evidence that inflation is
he's trying to please
and then beginning to come down.
the Wall Street guys because they've already front run, right? So they've already front run the market thinking of a pause.
Well, prior to yesterday, I think there was like a 30% chance of a rate hike.
Year since financial conditions began tightening. I think the reason we're
when you see the numbers come in being even
took place over last summer,
being what they were, you still know
it's reasonable to think that some of that may
about the employment. You still know about what's happening in the economy. You still see what's happening, and we're not in. The country hasn't realized that we're in a recession. It hasn't caught up. It will.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I wanted to ask further on
because watch, interest rates are going to end up
when you would hike again
going up slightly
of the year. Are there things that you would expect to
before they go to do the next interest rate hike
come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into?
You're right, David.
So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the
I wonder if this has anything to do with the debt ceiling, though, with the government borrowing money. Like if it keeps the borrowing cheaper for the government intermediately.
Tightening happens.
There's got to be something more to this than just TradFi. No, they didn't bring it down, but they didn't bring it up either.
That's different, but it's still the case.
And I don't think anyone was thinking they were going to start cutting interest rates yet.
Very quickly. So housing and durable goods and things like that. But broader demand.
Look at that 2-year yield.
And asset values and things like that. They just take longer.
There's no point in forward guidance if you just said at the beginning that they're not thinking about the next.
Not any certainty.
This just doesn't make any sense, bro.
No, it's like if you look at this like a game of chess, you're supposed to think moves ahead. So that the move that you're making now helps with what the overall game plan is in steps. Because you can't always just reach the goal in just like one quick stride. So again, a pause just makes no sense. It's like what? Is this so you guys can just chill for the next month and just like maybe take a little vacation and then get back to work?
It literally could be that. That's how much they don't care and just like milking the system.
Because it's the summertime.
Yep.
It's like this is going to be the best time for us to take a vacation, guys.
Go away in May.
Let's pause and then we're going to come back. We're going to come back hard. We're going to screw the Americans even more.
Included. Right. Go away in May.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And
he's a jackass.
If we were to see what we would view as significant.
You know what I really like to see?
Normally be expected.
I would like to say him and Gary Gensler in a cage match, and the only way one of them can leave is by one of the other being deceased.
Thanks, Chris Rugaber at Associated Press. You mentioned that many of the
like beyond Thunderdome.
Core services ex housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation
that would be
is now
beautiful.
Housing prices, and then we've had some quirks in used car prices. So given that these trends are in place, I guess I'm sort of asking the flip side of Nick's question, why signal additional rate hikes? Aren't things
politician deathmatch?
Why not simply give it even more time? Or I mean, it's surprising to see so much hawkishness in the dots given what we're seeing recently.
Yeah, so we're 2.5
True dat.
So 2.25 years into this, and forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and typically forecasted that it would, and been wrong. So I think if you look at core PCE inflation overall, look at it over the last 6 months, you're just not seeing a lot of progress. It's running at a level, over 4.5%, far above our target, and not really, moving down. We want to see it moving down decisively. That's all. Of course, we are going to get inflation.
That's a crazy hourly candle we got on Bitcoin.
We want to do that with the minimum damage we can to the economy, of course. But we have to get inflation.
Yep, didn't break below, didn't go above, just trading.
No, but look at the wicks.
channel.
Look at the lines above and below on the candle. How far they go down and up.
Yeah, you know, a long tail wick like that at the bottom shows that the bulls won, though, especially if we close in 2 minutes at this position.
Right, because it's showing that the buys are going up.
Exactly. So
decreasing the sell wall.
So really what you got here right now, guys, is...
And it's still going up. So now, yeah, it seems like what Powell has said has been bullish for the markets. I haven't looked at TradFi markets, but I'm assuming that, you know, it's if they have this priced in, which they have, that...
Yeah, they had it priced in, so it's a buy the rumor, sell the news. And that's exactly what we have right now, guys. As you guys can see here, Dow Jones down 250 points. S&P down, not too much though.
She got about a month to dollar cost average out of the market. That's what I would say.
And supply chains got all snarled up, so prices went way up, inflation went way up. Well, that was the origin, and it wasn't really particularly.
I thought he was done talking.
The labor market or wages, but as you
I think markets will roll over though. It takes a few hours for them to digest.
I think
even
many
tomorrow
analysts
you can see
believe
the sell-off, the full sell-off.
An important part of getting inflation down, especially in the non-housing services sector, getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just at a quite gradual pace. So, and that's, you know, that's a little bit of the finding of the Bernanke paper.
That's a zero.
Blanchard of a few weeks ago, which is very consistent with what I would think.
Michael McKee from Bloomberg Radio and Television. You said in the past that you don't like to surprise markets. It's kind of been the Fed.
He likes that one a lot too.
Have an idea.
He likes it when the girls.
You also said
looks like
a number of times that it would take
holding it from the bottom, from the bottom of the.
He wants that whole thing. He's got the head real close to the mouth too.
So I'm wondering, as we go into the next meeting,
you can almost lick it.
How Wall Street or others should look at your reaction.
Don't ever do your hair like that, Rice.
Time or data. In other words,
if
nothing much changes. If we're looking
I was actually thinking about cutting my hair like that, just for you.
Inflation levels.
That's unfortunate.
In July, in September, or November. Will you move because you've said you feel you need to? Is it time that's going to require
I thought about cutting it all off though.
Or would it be a reversal in inflation?
Pull a
just be a straight skinhead.
Pull a Jerry.
Hypotheticals about
yeah, no, I would definitely. Every time I have a shaved head like that, I definitely look a lot more of that kind of look. Unfortunately,
that's what we're doing here, and that's what we'll do.
So yeah, it won't be until I start losing more hair that I'll do that.
We'll just have to
but I am going to cut some length off here in the next couple days to a week.
We'll have to make a judgment.
Do you think inflation is likely to continue coming down based on the lags and based on your threat of a movement? Or are we going to be in a period where we're not going to know what's happening?
Both.
You know, I think if you look at...
I would just be, I don't know.
I'll just point you to the forecast. So inflation is running, core PCE inflation is running at about 4.5%, a little higher than 4.5%, and the median FOMC participant thinks it'll go down to 3.9 on a 12-month basis. This is by the end of this year. So that's expecting pretty substantial progress. That's a pretty significant decline.
But they still have their 2% target, which apparently just is an outrageous thing to even consider them getting back down to 2%.
We're committed to getting inflation down.
They would have had to have done interest rates all throughout the year and maybe been a little bit more aggressive.
Victoria Guido with Politico. Could you talk about the balance sheet and how you're thinking about it? What are you looking for to judge whether
that was real close to the lips?
No, she's a dirty girl. You can tell.
Brunette.
She's like, pull my hair and spank me. Choke me, daddy.
So let me say, first of all, on the Treasury part of it, I can talk about that and then go back to the balance sheet. So on that, Of course, we've been very focused on that for a couple of months, as everyone has. Treasury has laid out its borrowing plans.
Boring plan.
Yeah,
the boring plan. The boring plan of we're going to create a $1 trillion platinum coin.
Market disruption, and that they're going to watch.
That is idiotic too.
That's from the Treasury, which actually sets the.
Again, we're a bunch of grown-ups playing make-believe here, and we just want to make you think that we actually know what we're doing.
As the Treasury refills the TGA, the adjustment process is very likely to involve both a reduction in the RRP facility and also in reserves. It's really hard to say at the beginning of this which will be greater. We are,
and they're not really hitting them with any hard questions either.
No, they're not. They're softballing them big time.
To take up, for that matter. So we don't think reserves are likely to become scarce in the near term or even over the course of the year. So that's the Treasury part.
Again, if they cared about inflation, they would bring back a reserve requirement to the banks, a minimum requirement of 10%, and that would pull all that cash out of the public domain and into the banks.
Are you considering lowering?
And that would be a deflationary event.
Take some pressure off banks.
So we have a number of. I would say the RRP doesn't look like it's pulling money out of the banking system. It's actually been shrinking here lately. So I don't think that's not something we've.
That's in that speech I sent you, CB.
Look like that's
yeah, we're gonna play it after.
You got it. If you've not seen this, it's fucking hilarious.
If we want to use it, we can. There are other tools we can use to address money market issues. But
there are some good parts about AI that I do like.
Likely that we would do in the near term.
Janelle Marte with Bloomberg. Have you seen sufficient cooling in the housing market to bring inflation down? For example, how does the recent rebound affect your
Ooh, we got a Sade here.
Look at her. Yeah, she does look like Sade, man. You are old school.
So certainly housing, very interest sensitive, and it's the first place really, or one of the first places that's either held by low rates or that is held back by higher rates. And we certainly saw that over the course of the last year. We now see housing putting in a bottom and maybe even moving up a little bit.
He's trying to impress her.
We're watching that situation carefully.
Smile a little bit.
We will see rents and house prices filtering into.
Very welcoming body language. He was like basically like saying, "Here, come to my dick."
And I don't see them coming out quick. I do see them coming kind of.
Ooh, seeing I'll rub your head while you're doing it.
Now, and that's appropriate.
Or maybe there's somebody down there.
To target that with further rate increases.
Yeah,
well,
Janet yelling.
We look at everything. We don't just look at housing. So I think the way it works is
maybe that's why he looks so chipper.
Sit in their offices all over.
Janet Yellen took her dentures out.
Their forecast, and including their most likely forecast, including their rate forecast, and then they send it in on afternoon, and we accumulate.
I'm giving all that I had into my love. You took
I don't know that housing is itself.
That's what she should have said on the mic.
Picture, but it's part of it.
Look at the S&P, man.
S&P, wow.
Just shooting up.
Chairman Edward Lawrence with Fox Business. So I want to go back to comments you made about in the past about
no, it's gonna fade.
The CBO projects the federal deficit to be 2.8 trillion in 10 years. The CBO also says that federal debt will be 52 trillion by 2033.
Who's Edward Lawrence?
Do you
Was
talk
that the
more firmly with lawmakers
UAP guy?
about fiscal responsibility?
Oh, okay.
I'm assuming monetary policy cannot handle alone the inflation or keep that inflation in check with the higher level spending.
I don't do that. That's really not my job.
That's not my job, sir.
We hope and expect that other policymakers will respect our independence on monetary policy.
There's no independence, man. That's what cracks me up. They act like they're such an independent, non-federal
fiscal policy
agency.
And many of my predecessors have
what
I mean, they are. They totally are, aren't they?
No,
they are owned by private bankers. They have private investors.
They are influenced directly by the government.
And our need to stick to our
They've been chartered by the government. The Fed has not been audited, can't be audited.
No, under no circumstances.
Bro, you really believe that?
Then everything that was written in The Creature from Jekyll Island would be a lie then.
Chair Powell, So looking at the SEP, it looks like
Yeah,
GDP
there was
this year was
a meticulous plan back in the early 1900s to start the Federal Reserve.
And so should
Um,
we take that as a
trying to
sign
think of the
that the committee is more
politician's name.
confident, about
Hold
the
on.
Aldrich.
Let's hear what she has to say real quick.
Well, you just like her because she's
as it
chocolate.
relates to what
Yes, sir.
in March.
You know,
Yes, sir.
I would just say it this way. That I continue to think, and this really hasn't changed, that there is a path to getting inflation back down to 2% without having to see the kind of sharp downturn and large losses of employment that we've seen in so many past instances. It's possible. In a way, a strong labor market is that gradually cools could aid that along. It could aid that along. But I guess I want to come back to the main thing, which is, though, simply this. We see the committee, as you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%, and will do whatever it takes to get it down to 2% over time. That is our plan. And
Then why did he pause? Why did the Federal Reserve decide to pause and skip this time around if they're going to do everything that they need to do to get this thing down to 2%?
Workers and families and businesses, but also for the future. Getting price stability back and restored will benefit generations of people as long as it's sustained, and it really is the bedrock of the economy, and you should understand that that is our top priority.
Just a quick follow-up on that. I'm just a little confused because you said the committee will do whatever it takes to get inflation down over time. But when I look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
And why did you skip?
You know, if you look 2 and 3 years out with the forecast, first of all, I wouldn't put too much weight on forecasts even 1 year out because they're so highly uncertain. But what they're showing is that as inflation comes down in the forecast, if you don't lower interest rates, then real rates are actually going up, right? So just to maintain a real rate, the nominal rate at that point 2 years out, let's say, should come down just to maintain real rates.
Exactly.
Actually,
okay.
You know, since we're probably going to we're having real rates that are going to have to be meaningfully positive and significantly so for us to get inflation down. That probably means that certainly means that it will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think, as anyone can see, not a single person on the committee wrote down a rate cut this year, nor do I think it is at all likely to be appropriate. If you think about it, inflation has not really moved down. It is not so far reacted much to our existing rate hikes, and so we're going to have to keep at it.
We're going to have to keep at it, but we're going to pause.
Sorry, thank you.
I'm like,
crazy.
Hi, Chappell.
What are you smoking?
News agency. The May job.
Because I want some of that.
The rebound in May.
I want someone's going to make me stupid.
Unemployment. Is it consistent with the Fed's maximum?
What, does David know all the people that ask questions?
Are you worried about that, about this rebound?
He's on it.
He is. You're the man, David.
Of course,
This is the most diverse equity and inclusion panel I've ever seen in an FOMC meeting. Round of applause for that.
Across our labor market, that's essentially what we don't. We can't really adjust, but we do consider that when we're thinking about what constitutes maximum employment. It is for us a broad and inclusive goal, and so we do watch that. But remember, all unemployment, including black unemployment, has been bouncing around right near historic lows, historic modern lows here. So we're still talking about, I mean, what is as strong a labor market as we've seen in a half century here in the United States. So overall unemployment of 3.7% is 0.3 higher than it was measured to be at the last a month ago, but still it's extraordinarily low, and so it's a very, very tight labor market.
Thank you. I want to follow up first a little bit just on the rent question on housing. We heard Governor Waller talk about how
I'll back up. We haven't quite seen the slowdown in rents show up in CPI yet, and we did hear Governor Waller talk about how an uptick in housing.
She's using
means
both
that
hands.
There's not going to be
Yeah,
as much relief
impressive.
coming or a shorter.
Yeah, she likes
bit of
she
relief
takes
than
her
we thought.
time
Can you talk
and
about how you're thinking about that
and
how
she's
that
very
relates to
artful with the way that she takes care of her
I wouldn't say
partner.
So that's you know, as a factual matter, that's correct. We do need to see, you know, rents bottom out here, or at least stay
Megan
quite low.
Casella. She'll be the one that looks you in the
In
eyes
terms
while
of
she
their
does it.
increases, because we want the you know, we want
Okay, I think
inflation to come down, and
I would fade
rental,
this rally,
is a
honestly.
very large part
You know,
of
we
the
saw the dip
CPI,
down,
about a third, and it's about
and it
half of
popped
that
back up,
for
and I
the
think it's
PCE.
going to
So
traverse all
it's
of that.
important, and so we're something
But,
that we're watching.
you know, it
very
may not happen
carefully.
till
It's part of the overall picture.
end
I
of
wouldn't
this
say
week.
it's the decisive part, but
I don't know. I mean, if the markets have all this priced
you
in, I
see
mean, they've
is
still
when you
got
look at
until the
core
next
inflation
FOMC
over the
meeting,
past
which
6
is,
months a year, you're just not
again, let
seeing
me pull
a lot
that
of
back
progress,
up.
not the kind of
That's
progress we want to see.
25th,
And,
26th of July.
That's it's hard to avoid that, and you know, the committee, people in the committee, the median.
I'll send you in the
went
private
up
chat. Oh, I sent it to you.
significantly, so that the median participant now thinks that core PCE inflation on a 12-month basis will be 3.9% this year. So once again, every year. for the
That's
past
still
3 years, it's
almost
gone up
double
over
of
the course the
2%.
year, and it's doing that again. So we see that, and we see that inflation forecasts are coming in low again, and we see that tells us that we need to do more. And so we're
The 2-year yield, 2-year is yielding more than a 5,
Could you also talk
10,
briefly about your
and
outlook
30.
for wages, and given the recent slowdown in core services?
That's
exceeding
called an
inflation,
inverted yield
how far do
curve.
you think wages might need to fall in order to get inflation back in line?
So wages will continue to increase. So we you know,
Go,
what we're
Cassandra.
talking about is having wage increases still at a very strong level, but at a level that's consistent with 2% inflation.
Wonder how we get on this
And so
panel.
I think we've seen some progress. All of the major measures of wages
Never.
have moved down from extremely elevated, not extremely, but highly elevated levels a year or so ago. And
Let's
they're
apply
moving
for
back
our
down, but
press
quite
passes or
gradually.
whatever we need to get.
And you know, we would want to see that.
Let's start going to
process
DC. Let's
continue
cover this shit in
gradually.
IRL.
It's great to see wage
That'd be
increases,
classic.
particularly for people at the lower end of the income spectrum.
Bullshit.
But we want that as part of the process of getting inflation back down to 2%, which benefits everyone. I mean, inflation hurts those same people more than anyone else. People on a fixed income are hurt the worst and the fastest by high inflation.
And see, that's what I'm worried about. A stock actual pullback is going to look very bad for cryptos, and so.
Thank you so much.
Yeah, but dude, I mean, I think you know this. It needs to pull back. David's so on top of this shit. It needs to pull back, though. It really does.
There's strikes now, and
Like
Hollywood,
we're not
the
attached to
United
reality.
Automakers are
It's
talking
it's
about
the most asinine thing that we have going on.
We have some workers have power now and are going to be seeking higher wages. Does that come up in your discussions? Thanks.
Exactly, AZ.
So the topic of wages in the labor market and dynamics in the labor market is about as central a topic to our discussions as anything. I mean, it's very labor economics, you know, and the labor market are utterly central. You know, it's half of our mandate, so we spend a lot of time talking about that. I think, you know, there are structural issues that are really not for the Fed. And so we don't spend a lot of time, although we take notice of what's going on. But we're not, you know, we're not involved in discussions or debates over strikes and things like that. But we, you know, we look and we see what's going on, and you know, we're making judgments about what it will take to get inflation down to 2% in the aggregate. And as I said, don't think that was about. Most folks would say now it wasn't really about wages at the beginning. And it's becoming more about that as we get into really service sector inflation, which is the part of the economy where we have seen the least progress.
Let's go to Mark for the last question.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. Wondering what your thoughts are now about systemic risk.
Does this mean it's the actual last question? Because this is like really boring.
Valley Bank, and also specifically, what are the risks associated with commercial real estate as well as non-bank financials, and could you further elevate those risks?
They should do something to make this more exciting.
Rates, possibly for longer.
At least ask the questions in a more positive, exciting, kind of upward manner in their delivery.
We, of course, we're watching that situation very carefully. There's a substantial amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed. To the extent it's well distributed, then the system could take losses. We do expect that there'll be losses, but there'll be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring it carefully. It feels like something that will be around for some time, as opposed to something that will suddenly hit and work its way into systemic risk. In terms of non-bank financial sector, there's been a ton of work, and clearly in the pandemic, it really was the non-bank financial sector where issues really arose, and there's a lot of work going on with the administration, in particular, leading that to try to address issues in the Treasury market and in all kinds of areas in the non-bank financial market. But our jurisdiction at the Fed is over banks, actually bank holding companies and some banks. So that's really our main focus. In terms of the events of March, as I mentioned earlier, we will be carefully monitoring that situation. Our job generally involves worrying about a lot of things that may go wrong, and that would include the banks. It might be hard for me to identify something that we don't worry about rather than that we do worry about. So we're watching those things very carefully. And as we see,
you could have been. You were warned about SVB and did nothing about it. So you guys aren't concerned about anything.
No, again, that's why I think
it's
a consolidation thing, man. They're really, to me, and I mean, a lot of people have said it as well, that they're trying to get rid of the smaller and regional local banks.
Do you risk further exacerbating?
They want to consolidate this thing down to a few.
Get up to another 50 basis points?
So that's, and I guess I meant to address that by saying, as we watch, we'll see what's happening, and if we're seeing the kind of tightening of conditions that you could be referring to, then we can factor that, because really we use our rate tool it really has macroeconomic purposes, so we'll take that into account. Of course,
I'm gonna use my rate tool to bend you over.
Well, and that also is a factor that we're always going to be considering. Thank you very much.
Thank you very much.
All right, finally done.
Bullshit.
Finally done. Finally done.
Bullshit.
Well, there you go. I didn't get anything from that rice. I don't know about you, but
minor entertainment.
Minor entertainment.
With what we were adding to the whole flavor, that was pretty much, yeah.
Exactly.
That was the fun part about it.
I got an entertaining clip for you guys to watch. Let's watch this real quick.
Good morning. First off, fuck your bitch and the click you claim. I am here today, despite the blackout before FOMC, to tell you regards not to pump the market. If you pump the market, I will have to bitch slap you on Wednesday. Let me take this opportunity to tell you that I already sold at the top, and me and my fellow Fed buddies are looking to get back in long once the market bottoms at 3,600. Yeah, that's the JPM collar put leg for those of you keeping track at home. Me and Jamie Dimon planned for this. So if you WSB twats pump the market Monday and Tuesday because you've been listening to Jam Crossant and Believe in Vanna and Charm Flows, I'm going to put on my Walker mask and come fuck your moms on Wednesday. Also, we are going to bail out the banks, but you fuckwads better not pump the stock market on this news. Okay, enough. I gotta go. I got an appointment. Nick from Wall Street Journal is coming over to suck my dick for some scoops. Always remember, fuck your putts, fuck your calls. Jay Powell has you by the balls. God bless my money printer.
Oh my God.
Isn't that beautiful, dude?
That's hilarious. I gotta drop the flex bomb on that one. Oh, Jay Powell.
Those last few seconds, though, those last few seconds could be clipped down shorter. Just Jay put, it's classic. I don't know who created it, but shout out to whoever did it.
Shout out to them. I want to wrap up Rice with XRP because I know you think they're possibly going to win. What's your latest? Anything after the Hinman files came out? You changed?
I've got to dig a little bit more into it. I mean, what I'm gathering from the Hinman stuff is that it's very conflicting. I mean, apparently it's still on the website, the actual speech and stuff. So it's as if it's something that the Federal Reserve endorsed, or excuse me, the SEC endorses, but there was things kind of sitting there where Hinman was warned not to say, suggested, told numerous times not to use certain language, not to say certain things, that it wasn't. I think they used the words like unconstitutional and other terminologies, other terms that they used. So I'm really am not sure. I mean, there's so much riding on the line with this that is going to set so much precedent that it will completely stifle the cryptocurrency industry in the United States. And
I mean, but when you have headlines like this come out, SEC responds to Coinbase second request, mandamus request with a still no.
What is it that they're asking for?
They're asking for a straight explanation on their rules and their guidelines for making their decisions. They asked them about it last year.
Is this in regards to the lawsuit that Coinbase did with the SEC, or is this in conjunction?
Is a lawsuit. Yes, this is the lawsuit that Coinbase did against
that
the
Coinbase
SEC.
Brought, not the one that Coinbase was brung to.
Right, brought to. They repeat the fallacy that they haven't made any decision on new crypto rules. They refuse to commit to any deadline despite the court's explicit order. So this is what I'm saying. How can you think that XRP is going to win when the SEC is not even listening to the judge's request?
Well, I mean,
this is insane.
I know, dude. I know. And you also have politicians that were coming out with like these clarity, like kind of trying to put rules in place and clarity with things to have more definition. And then I believe that was the tail end of the week before Binance got hit, and then Coinbase got hit on that Monday and Tuesday. So it could be a war in and of itself going on within our very own government. I mean, it could, because it doesn't look like a lot of politicians, unless this is 100% a game. It doesn't look like 100% of these politicians are on board with what the SEC is doing. And there's a lot of people speaking out about it enough to where it's making its way to the mainstream news. And if it's making its way to the mainstream news, it's going to make the average everyday person be aware of it and think about it. So it does not benefit the United States to regulate crypto out of the nation and allow for other nations to capitalize on it. It does not benefit. So I'd like to see something actually take place with the politicians. I'd like to see a minor bit of faith be restored, and these politicians in Congress, Senate call for the firing, the removal of Gary Gensler from the SEC and restructure the organization and update the rules for a modern age that we live in. That would be what I like to ideally see. Now, in all honesty, man, everything is so ass backwards. I don't know what is reality. I don't know what is up, what is down.
Bro,
I don't know what's left, what's right.
Everything's out the window to me when you got our government literally filing federal charges against our previous president. I mean, everything is, I don't believe, I have no faith in this government anymore, man. It's done. Where are you moving?
I don't know. I'm going to be interviewing a lady who talks about some citizenships in Portugal, and I'm going to be trying to. There's another individual that I know. Her name is Katie. I forget the name of her company that she's with, but she does secondary passports. So I'm going to be bringing on people about that. I mean, I don't know, man. I'm still looking. I mean, we're still technically, from what I understand from people who travel around the world, we're still the freer nation in the world. So I'm looking at alternatives, but at the same time, I may stay here and just stick the fight out. I don't know. I'm almost like the Federal Reserve. I can't really plan too far ahead because I don't know what the fuck's going to happen the next day. Now, the Federal Reserve, they have a little bit more control over that, but I have absolutely none.
Go check out Rice's interview with G. Edward Griffin. Legendary. Second interview with him.
You know, I was watching the other. If you
finally passed 1,000 views.
Yeah, finally. Have you seen any of the Plandemic series?
No.
I'll send you the website. There's 3 different movies that were put out by a guy named Mickey Willis. They're really good documentaries, and the third one he just released, and it features a 1960 lecture or documentary that G. Edward Griffin had done, talking about communism and talking about what would happen to the United States, and revisiting it later. And so they're using all this old clips from him, and you have all these other different people coming in and talking about what's being shown and what's being shared in the documentary, and then they get an updated version. They bring G. Edward back like a modern interview, and he was actually repeating the end of that lecture that he gave. And he had said that it's been a long time since he had actually listened to what he said. And he didn't realize how on point he was going to be about some of his predictions. And that's gotta kind of be, when you're predicting things like this and they actually happen, it's not like an ego thing that I think people are like, the way that G. Edward feels. It's more of a humbling, and also wishing that you weren't right, that you were wrong because of what's taken place. I mean, I think the idea of when people are trying to get this information out is to avoid these things from happening. So, I mean, G. Edward Griffin was talking about this back in the 60s, and a lot of what he mentioned, and it's insane, dude. It's really, when you listen to what he said and you compare it to what's taking place with our nation since then, it's so on point and parallel. And I would encourage people to check out the website. I'm going to try to pull up the Telegram, and I don't want to get the channel in trouble, so I don't want you to share the link.
Yeah, I won't share, but we'll be doing another uncensored, not this weekend, but the following weekend. So make sure you guys watch out for information on that.
But Mickey Willis, people can look up his new documentary, and you'll see some information. I might find something that I can share on Twitter. So make sure you're following both of us on Twitter.
Yeah, definitely. You were on RT a little bit ago.
Yeah, man. I mean, they put it out a couple days ago, and I just released it. It's so outdated though, because I mean, we recorded it like 2 months ago. It feels like it's, the way I wish that I had a job as a host of a show where I just got to come in and work for maybe a few weeks or a month and film enough stuff for 6 months and then just go chill and come back and work.
It's hard to do that nowadays. Things are moving at such a fast pace. Evergreen content you could do it, but
that's what
it wouldn't be as interesting.
Right. And this is like talking about the, SVB and Silicon Bank, the Silicon Valley Bank, and the Signature Bank collapse, which was several months ago. So it's a little outdated, but the information is still relevant because of things that I spoke about. And I mean, it's, my second time being on RT, which I think is still kind of a cool thing. It's a big thing. It's better than just being on my own channels and making guest appearances with my peers. So shows that someone appreciates my work.
Yeah.
I think it's aired in like India and China and it's not in the States. So
of course not. Land of the free. We're free here, Rice.
Yeah. So
shout out to Ben, Bitcoin Ben, again for the $20 super chat. We'll be talking with him, back channeling him about when to come down there. We were in Florida at the same time. He had his new club grand opening, but me and Rice were in Florida for different reasons.
Yeah, we were all in 3 different locations.
That's crazy. Yeah, I was went to Disney World, took the fam down there. You were in where? Tampa?
I was in between. I mean, I was literally, Ben was in the middle of where I had to go, but because of my timeline, I didn't have any chance to be able to do anything beyond what I was there for. So I went from Tampa to Fort Myers to St. Petersburg, back to Tampa, and flew home. And Ben's in Sarasota area, I believe.
Right. Don't forget, win 9,000 up to 9,000 prize pool for trading meme coins. All you got to do is trade. I think it's a certain volume you got to do on Dogecoin and Sheep, on BYDFi, their name is now. I want to call them BitYard. But check those guys out, link in the description below. Also, make sure you go follow Rice on Twitter, please.
And follow Blood on Twitter as well, please.
Please. Please and thank you. Yes,
you're
follow
welcome.
me as well. You know, trying to get to that 11,000 marker.
I don't even care. I'm just there.
He's just there, guys. He's just there. He's just there. That's it, man. I think that's all I have for today, bro. Thank you for everyone tuning in on both channels. I like this syncing thing where we can see everyone's.
No, it's awesome. It's awesome.
Comments.
I really like that.
Yeah, I really appreciate it.
Shout out
again,
to StreamYard. The next thing they need to do is integrate Rumble as a non-custom platform. That would be beautiful. Then I would be super happy.
Really clutch. Yep. Absolutely,
Odyssey would be great, but Rumble first, because Rumble is, I wish that we were getting the views on Odyssey that we were getting on Rumble, but I'm glad to see that we're getting traction on other platforms. So
yes,
we're
go
both
check
on
out
Rumble.
our latest Uncensored that happened last weekend. 815 views. That's a good amount of views on Rumble, man. Bro. That is nice.
I've had a couple over 1,000. I'm very fortunate. A couple of my live
streams.
Streaming the Crypto Mindset Reset, I think they both were over 1,000 views.
Oh, nice.
So, yeah. I didn't mind allowing my channel to be used for some, because I knew that Rumble, I haven't seen any insanely crazy censorship issues with Rumble. I'm sure if you're like putting on some, I'll shorten the word, corn, and maybe some snuff films, then there might be an issue, but otherwise I haven't heard any problems. So but with doing a live stream that I'm not controlling or running, I'm not going to let somebody do it on my YouTube channel, knowing how sensitive this algorithm that we like to have menage a trois with is. It's a very sensitive little algorithm.
Yeah, and I didn't say this at the beginning, forgot to, but tomorrow I'll actually be having Reggie Middleton on. So I'm gonna get an update. Yeah, I'm gonna be getting an update from him.
I thought about reaching out to him.
Yeah, and that's gonna be an interesting conversation. So all my YouTube premium members, get it first. Of course, I'm gonna try to actually live stream it to my YouTube members. We'll see how that works. If not, you'll get it right after, uncut, and I call it unraw, uncut and unraw. For all my YouTube premium members.
Ooh, baby, I like it unraw.
Oh, baby, I like it unraw. I'm gonna redo my Booker T. I'm gonna get some AI, right? Get the voice, and I'm gonna say, Jerome Powell, we coming for you, nigga.
I love it.
Yeah. All right, man. That's it, bro.
I'll be on Around the Blockchain tomorrow at 5:00 p.m. Eastern time.
Oh, sweet.
Yeah.
I don't know what day this week. If I am on this week, I'll let you guys know as well.
Make sure you guys smash that like button wherever you're watching. Make sure you subscribe to both of our channels. Follow us on other platforms. Have yourself a great day.
Holla.
boy.
Yeah, stacking my coin, stacking my coin, stacking my coin, stacking my coin. Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash. Stacking my coin, stacking my coin, stacking my coin, stacking my coin. Bitcoin, Litecoin, Ethereum, cash. Bitcoin, Litecoin, Ethereum, cash. Since I was born, been stacking my coin. These niggas pop, my money keep growing. Your girl is a dot, she all on my groin. She blowing my horn, we fuck like porn. These rappers is whack, they lyrics are corn. I'm getting this money, it never get born. I'm loading my strap, they calling the law. Fuck around and get clapped for running your jaw. If it ain't about the dollars, then it don't make sense. Got me sipping brown water, but it ain't from Flint. Trying to chase all this bread, though the shit won't last. About to shut the city down, let the crypto crash. Stacking my coin, stacking my coin, stacking my coin, stacking my coin. Bitcoin, Litecoin, my coin.
Fuck it! Do it live! I'll write it and we'll do it live!
Okay. Ready?
Fucking thing sucks! We'll do it live.
Okay.